The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the April 22nd, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, a daily investment newsletter service that is the intelligence for creating your financial freedom. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs that deal with mistakes. You know, John Templeton said this once. I know he said it because I read it in one of his books. That's why I wrote it down. He said, those who seldom make mistakes seldom make discoveries. Think about that. I wrote it down. I would suggest that you do the same. Those who seldom make mistakes seldom make discoveries. Are you like Christopher Columbus out there? Would you like making discoveries out there? I know I do each and every day. How about this? Claude Gibb, he said, progress is made by correcting the mistakes resulting from the making of progress. Think about that one, folks. You know, there's a lot of folks that are just simply stuck in the mud, not willing to take some kind of action. Is that you when it comes to the markets out here? If it is, go check out Mastering Probability. Go check out some newsletter service out there. Progress is made by correcting the mistakes resulting from the making of progress. Look, here's a Steveism. Our mistakes won't irreparably damage our lives unless we let them. True story. Persian rug artists stand before the rug, while a group of boys stand behind the rug to pull the thread after the artist starts it. True story. If one of the boys makes a mistake, the artist adjusts the pattern accordingly so that when the rug is finished, no one can tell where the mistake was made. The same kind of adjustment can take place in our lives so long as we let go of the mental thread of each mistake and instead let the universe weave it into the success that we are, folks. Always remember this. Sorrow looks back, worry looks around, but faith, it's always looking up. Life is looking up for you and I, and maybe these markets are too. We've got the Dow. It's trading up 59 points right now, trading out at 16,508. S&P up 7 points, trade at 1879. NASDAQ futures up 31 points, leading the charge to the upside. Something to think about. It's trading out at 41.52. Russell 2000 just behind it. It's neck and neck. It's up 0.7% as well. It's up 8 points, trading at 11.50. NASDAQ up 23 points, and NASDAQ 100, I should say, trading up 23 points at 35.83. I'll get it out. New York Stock Exchange up 40 points right now, 0.4%. We've got net advancing issues here today, 1101. That's pretty decent strength. You've got market advancers leading decliners by over 2-1 here this morning. We've got the semiconductor index. That's up 0.6%. Markets don't move down with the semiconductor index moving up like that. It's trading out at 586. The transport's up 0.6%. They're up 49 points. The volatility index, it's down 20 cents, trading out at 1305, well below the 50-day exponential moving average. That's liquidity inside the market. The euro yen, that's moving higher here this morning. You got liquidity all over the place. As long as there's liquidity, guess what? It's got to be put to use out there. And it's one of the reasons that the markets are moving higher. Our call number is 877-927-6648. Give me a call. Be happy to take a look at your stock charts. Let's start off. Let's take a look at the indexes out here. Let's go see what they are doing. Well, we know they're moving higher. Let's try to go gauge where they are moving to. Let's take a look at the NASDAQ Composite first. NASDAQ Composite now is what? If we take a look at just simply its last area, its last leg down. We're going from a swing point high to a swing point low. What we would do is we would take a look at the April 9th high. That's out at 41.85.19. You go from that high to, of course, that key reversal session. How important are key reversal sessions? I'd say PDI, pretty darned important. If you didn't catch the first hour of the show, Maybe I'll do it again. Maybe I'll try to pull it back up. If I don't do that, go check out the first area of the show, because the only I'm looking for, I'm bullish right now, absolutely bullish. Have been for a while. My clients and I, we've been long the NASDAQ, by the way. Looking for a large bounce out here. So I'm happy to see the NASDAQ leading the charge on the way up here. I do expect we're going to see the NASDAQ get up to 41.85. That'll make a 100% move of a move here. And what was it that gave us that signal? Well, there are a couple different things. We looked at 120-minute charts. We looked at a number of things in order to take a long position inside the NASDAQ, and we did it on April the 15th, to the best of my recollection out there. Right now, it's trading up above the 0.786 retracement of that last move down, which was at 41.34, kind of gapped up into it here this morning. That's a positive thing. So 41.85, that is what's next on the horizon out here for the NASDAQ. If we take a look at, we could take a look at, really, here in essence is the trend line that I would be looking at. And that trend line would be coming off of the March 7th high out at 43.71.39 to the highs out here at 42.84.68 on April 3rd. I suspect that's the area where we're going to really find out whether or not this was a major market bottom that was put into the marketplace. Yes, I'm saying a major market bottom put into the marketplace. You've got that nice V-shaped formation that has already taken place here off of this swing point from April 9th down to the level here on April 15th. And look, folks, we're long, but that doesn't mean we don't have exit in place on both sides of the trade. When you place a trade, your most objective time period is before you've placed that trade. You should know what your exit is, your exit strategy. If you own a business, if you start a business, before you start that business, before you invest money in that business, you ought to know what the exit strategy is. You ought to know what your stop level is. Trading and investing are nothing more than a business. It's a numbers game out there. It is just simply a numbers game, and I'm a numbers expert. I'm a CPA. I was CPA since the age of 21 out there. That means licensed and practicing and the whole bit out there. That's what I love about Fibonacci numbers out here. That's what I love about taking a look at Fibonacci numbers and just how excellent they are as guidelines as to where price is able to move to levels that you should be looking at. And that's where understanding what the bulls and bears are telling us by taking a look at candlestick charting is so important. So important, because you see bulls and bears, they show up to work each and every day. And their job is simply one thing. Their job is to paint signs, and it's up to you and I to be able to read those signs out there so that we can go ahead and trade. And then it's up to us to use the math exercises of using stops, adjusting stops, and so on and so forth. Enough belaboring out here. What we want to be watching for inside the NASDAQ composite, what happens when it gets to 41.85, that 100% move of a move. I expect at some point in time we're going to see some little bit of a pullback out here. Whether it's a pullback or it's really the next leg down, that I can't tell you as we speak here right now. But the 41.85, that now looks to be the mark. Of course, what I'm interested in is what happens when price gets up to this trend line. That's what I suspect we are going to eventually see. And if it takes out that trend line, that will be very important out here. And I would imagine it's going to be testing that when the Dow and when the S&P are testing its highs out here. If we take a look at the Dow right now, if we take a look at its last retracement level out here, coming from the highs of April the 4th down to the low that was put in here on April the 11th, we'll see that you're up above the 0.786 retracement level. That number is 16,499, 16,500, let's call it. You're trading at 16,518. You close above 16,500 today. That says what? It says you ought to go at least test the highs. Now, inside of the Dow here, you had a nice big old bearish engulfing candle that took place here after that little doji in the window on April the 3rd out there. So that's a reversal signal, says 16,631. That is that's your resistance level. Of course, we had a nice little bearish engulfing candle on January 2nd, just as we came back. So the market made a high inside the Dow December 31st. We come back from making New Year's resolutions. How many of you out there have actually kept those resolutions? How resolute are you about that? Yep, that's what I thought. That's why you want to make sure you have strong reasons why. If you don't have strong reasons why for things, folks, you won't actually follow through on them. Number one most important thing when you decide to do something is make sure you've got a strong reason why. Because if you don't, it just simply won't last out there. In any event, the high of December 31st, another place that we're looking at, 16,588, 16,588.25. That, too, is a resistance level out there. This is a nice move up. This move up here looks a lot like what we saw off of the lows back here in February. All right? Saw a nice little V-shape formation. Look what we've got going on right here. What do we do in February? Well, in the case of February, of course, that was quite a bit inside the Dow, quite a much larger move to the downside out here. What we actually have in place inside of the Dow, if it can take out the highs, 16,631 out here, what we really have is we've got a Gartley buy. And that Gartley buy is what formed on April let's take a look, April the 11th, I believe it was, out here. That was on April the 11th when it made a 1-to-1A to B equals CD. Now take a look at that B to C expansion out there, 1.618 expansion. You got to love the fib numbers out here. And then it gave you a nice big bullish engulfing candle on April the 14th. We've seen a nice explosive move off of the bottom. What could the Dow do if it takes out its highs out here? I'll tell you what it will do. Or what it could do, I should say, because I don't have a clue. I can't guarantee anything out here. But I can read the charts. Read them really good, really well out here. The 1-to-1A to B equals C to the upside inside the Dow, 17,306. So if it takes out the highs, if it takes out those all-time highs, that's what you're actually looking at. You're trading at 16,517. I know you say, how is that possible? You know, folks, as long as the euro Japanese yen continues to move higher, and that's something that we certainly want to be paying attention to. We'll switch over and take a look at that. Let's switch over and take a look at that right now. Then we'll come back and take a look at the indexes out here. We ended up the show the last hour taking a look at the euro Japanese yen. That is the carry trade. That is the currency pair. That is the fuel behind the rocket ship. And until the euro Japanese yen gets up to the 143.46, unless there's some kind of reversal before then, but it looks to me like 143.46. That's going to be plenty of fuel inside of the markets. And then if it takes that out, and that's the whole deal here. If it takes out those highs, you see you've got an active, confirmed 0.786 Gartley sell pattern on the daily chart. And now what we've seen is nothing more than a consolidation sideways. Now, consolidations, as you know, when they get taken out upside or downside, they make that measured move out there. Of course, it's equal to or greater than the measured move. The pattern here that really takes the priority is if, in fact, those highs are taken out, 143.46 or so, 143.75, taken out with some kind of conviction, that failed 0.786 Gartley sell will turn into a butterfly. And that is what will actually go ahead and send the markets higher. You say, impossible out there? I say, anything is possible. All you really have to do is go take a look at what's going on the longer-term time frame for that currency pair. And if we do switch over to the euro-Japanese yen, on that time frame, what we're going to see, it's well up above old resistance. That becomes new support. In fact, that new support was tested. That's the support going back into the 2009 time frame that was tested here back in February of 2014. This says that it wants to move higher. How much higher? Well, if you just take a look at retracement levels from the highs out here of this currency pair back in July 2008 down to the lows that were put in here back in August of 2012, the 0.786 level, and you're trading right now at the 0.618 area, 153.89. And that is really what the weekly chart here for the euro-Japanese yen is communicating. At least it's communicating to me. It's neither overbought nor oversold. It does not have a price relative strength divergent pattern whatsoever. It can move higher, and it can move much, much higher. And if it does that, if it takes out that daily Gartley sell pattern, look out above. 877-927-6648. Dow's up 67. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 65, S&P's up 7. Russell 2000 on the move here this morning, up 9 points, up 0.7%. Train out 1151. Let's go back, though. Let's take a look at the NASDAQ. I want to show you the the weekly chart here for the NASDAQ futures, the NQ. And take a look at the weekly chart. Now, if you're watching this on Tiger TV, the areas that you're looking at on my screen here, you'll see some horizontal lines out here, like a lime green, a light blue, and a red area. Those are the TAS signal box lines. Folks, if you haven't had a chance to check out that system, go to the homepage at TFNN.com and check that out. What we can see here, what's interesting about these market profiles is if you take a look at what price did. So we know the NASDAQ was the weak link out here, and obviously the weekly charts have got more meaning than a daily chart. And what's interesting about the weekly chart, they formed a new little signal box here, unfair high, unfair low. If you've seen the videos that John Logan does for us, if you take a look at the unfair low out here on the weekly chart, they formed a new box on the trading session of, March the 10th. The week ended March 10th out there. And the bottom of that, so the support level, right around, do work for me, would you? Right around the 34, 38 level, we can see here is on the move down. the weekend at April 7th, the weekend at April 14th. That level was never taken out. That level held as a support area. Now, a new box here on the weekly chart they formed yesterday for this week. This says that you've got resistance at about 36.67. You're up above the point of control area out here. So, on a weekly chart, you've certainly not gotten a sell signal out here, and the weekly trend is still in place. Now, that's important. That's the NASDAQ. So, how do we put all this together with regard to what's going on? Why could this potentially be a major market bottom out here, even if we're coming in to sell in May? Just reading the charts, just looking at the charts, just taking the information one step at a time out. If we take a look at the daily chart out here, daily chart as well. Now it's kind of in consolidation zone range. What I would expect here, what the signal box is giving to us, it's saying that right around 36.46 to 36.69 really becomes the resistance area inside of the NASDAQ composite, inside of the NQ out here as its real resistance level. So it's got the freedom to move up into those levels out here. So we'll continue to pay attention to that. Let's go take a look at the ES Mini. Let's see what it is doing here this morning. We'll look at the weekly. We'll take a look at the daily charts as well. We'll take a look at those levels of support and resistance. Of course, what we know inside of the ES Mini, inside of the S&P 500, that it's moved down out here, was really tepid. There was no real destruction inside of the ES Mini. As the chart goes and calculates here, maybe that's what it's been that's slowing down my system. It is the one change that I did make to my system out here since we were last on the air yesterday. So it could be all these calculations that are going on here as I linked all of the continuous contracts together to give me this new symbol out here. So there we go. The signal box ought to be out here. Now, what the signal box is telling us on the weekly chart, and I'll go ahead and I'll blow this up on my screen out here. Weekly chart is telling us what? We're actually in bull mode here. We are in absolute bull mode. So price came down here last week, April the 14th. Tested that unfair low, that support level. You're now up above resistance. Resistance out here is 1839. You're on the weekly chart. You're trading out at 1872.50. So the weekly chart out here is saying full steam ahead on the ES Mini. If we take a look at the daily chart, a little bit different picture out here. Daily chart says that right now we're at an area of congestion, right around the 1873-ish range. If we get above that level, we ought to see 1892.50, and we'll see if that, in fact, acts as the resistance level. 1892.50. Key level as a market profile out there on the ES Mini. You get above that, that would just be confirming the larger trend, what's going on inside of the daily chart. So let's take a look at both that's taking a look at both the NASDAQ and the ES Mini just to give you an idea of what's going on with regard to those market profile systems out here. Let's take a look at things that are popping and dropping in the marketplace out here. You've got, let me see here, I set up another tab. Where did I put that tab? I might have put it here. I put it here, Radio 3? No, I didn't do that. Maybe it was right here. Yeah, it's right here. I think it's right here. Let's take a look at some of these. So you got Intercept Pharmaceuticals. That's up $40, up about 17%. Netflix up $22. Jazz Pharmaceuticals up $10. Wynn Resorts. I think Wynn Resorts was out with numbers here. WYNN up $9, up about $4.80. No, I don't see the earnings results out here. But that is trading up nicely. To the downside, you've got Metadata Solutions, MDSO. That is just truly getting hammered. Big volume, down 25% here this morning, down 13%. When we get back from this break, we'll go take a look at a couple of these stocks. Maybe we'll go surf around. We'll take a look at the ETF structures, see what's going on there. Right now, we've got the Dow up 67, S&P up 7. Yeah, we'll take a look at the Russell 2000 because that's leading the charge certainly here this morning. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target and stop price of each stock in option trade. With market insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 74, S&P is up 8. I mentioned the Russell 2000 because it's up 0.8% this morning. Composite is up 0.8% this morning as well. And what I've got on my screen here, I've got the 120-minute chart for the Russell 2000. Now, I've got about a 10-minute delay out here. The exchanges tried to just simply rip you off. And I'm not big onto ripping you off out here in any event, so I can deal with the 10-minute delay. But what we've got here, really the point that I want to make is that usually these significant market bottoms or significant market highs are oftentimes made with, those last thrusts, down or up, those exhaustive type moves. And what you'll typically find is that those moves are made either to the downside with less relative weakness, and that's what we see here at the bottom right now in the Russell 2000 futures contract. That took place on the trading session at about 2 o'clock in the afternoon. That was on April the 15th out here. That's when the market, made its low. It made a low with less relative weakness out here. Just as if I go ahead, I'll just move the chart here as opposed to use the scrunching method. Scrunching is a technical term that us chartists have to use when we've got to squeeze charts together. Just as it was making a significant high at about 12 noon on March the 21st out here, as it was making a slightly higher high, doing that on less relative strength out there, and then followed up by a bearish reversal signal out here. So with regard to the market's next move, now these patterns don't always have to form at tops and bottoms out here, but what we've got right now is a nice strong move that's going on inside of the Russell 2000. We're not seeing any kind of divergence like that, which is what you would really expect in the week index, the week indice out here. So let's go take a look at the NQ. We'll take a look at the June contract for the NASDAQ. You'll see the bottom that was formed out here with a price relative strength divergent pattern. Now what I'll show you, I'm going to go ahead and expand this out, is we had that potential of that pattern here that was forming. That began to form right around 8 o'clock this morning. But what we did see is during that next 120-minute session here, during 10 o'clock, we saw a move higher with what? With more relative strength. That's bullish. And we're talking about bullish from the weak area of the marketplace out here, right? To me, that says something. That says, hey, something to absolutely think about. Now, with the relative strength index getting up into these levels here, 120-minute chart we're looking at, 77.62, we've got to be on the lookout for that little topping pattern where price moves higher on less relative strength. But we don't have that pattern in place here right now. What we do have in place is we're going to see a 100% move of a move. That should occur when price gets up to the level here of about 3,600.09, right around there. You're at 35.74, so it looks like we've got another 25 points or so in store for us. At least we're not seeing that normal topping pattern or significant topping pattern like we saw out here inside of the NQ. That was back on about 12 noon back on April the 3rd out here. So we do not have that pattern that is in play. Of course, you can switch over and take a look at these same patterns on larger term time frames. In fact, let me do that. Do I want to do that here, or do I want to pull up another chart? Give me a moment. Let me see my daily chart out here. Give me a moment to try to pull that up. Let me switch over and take a look at this is equity. I was looking at taking a long position in this morning. I did not take that long position. We were trying to take two new long positions. I didn't want to add a third one here just yet. But let me switch over and take a look at the NQ. Now I got to put the continuous contract because I want to switch over to a monthly out here. So give me a moment. Let's do that. We're going to take a look at the monthly charts out here right now. So inside the NASDAQ, what's interesting here about the NASDAQ as we speak, we take a look at a monthly chart. And this is really interesting. We'll take a look at it from a couple of different perspectives. So the NASDAQ has been powering higher. Right, it's been powering higher. You see these little red boxes on my screen out here? All those red boxes on a monthly basis, they tell you who's in control, the bulls or the bears. Red boxes tell you it's nothing but buyers that are in control. We haven't seen on a monthly basis, we have not seen a reversal signal. So unlike, I haven't covered that here yet. Maybe I'll do that when I switch over to I'll switch over and we'll take a look at the Dow as an example. But the NQ on a monthly basis, there's no reversal signal out here whatsoever. None. It's not a price relative strength divergence. There's not a candle reversal. There was the potential for that. And the month's not over, so anything can happen. If you were to get it closed below, looks like about 35.13, then the answer is yeah, then you could have a stitched reversal signal out here. But we don't have that inside of the, what is supposedly the weak index out here. It all depends on the time frames that we look at, doesn't it? That's really what matters out here. If I take a look at the ES Mini, let me do that. Then we'll go take a look at some of the other charts. Let's put the ES Mini, we'll put that on the continuous contract as well. See what kind of damage. None. It defies odds. If somebody can find something bearish about the ES Mini on the monthly chart out there, call in and help me see where's that reversal signal, because otherwise Stevie is missing something completely out here. Now, where is that? And I'll tell you where it is. I guess I was baiting you out here. And that is this, and it's the same thing in the S&P 500. The only potential reversal signal comes down to what the close looks like next week on Wednesday. And that is this. There is the potential for a key reversal session out here. Key reversal session That's where price exceeds both the high and the low of the prior session out there. We've got that inside the S-Mini. We've got that inside the S&P 500. I'll switch over to that chart here momentarily so you can take a look at that. What that would require a down close. On the ES-Mini, the open was 1864.50. You'd need to see it close at 1864.25 or somewhere below that. That would qualify as a key reversal session. Let me put the S&P 500. We can give you those numbers as well out here. But again, that's not until next week. So we got a lot of time left in the trading month out here, today's session included, before we get that. But that would be a reversal signal. If, in fact, the S&P were to close like this today, you see the candle is just slightly red. I'll blow that up on my screen. That actually qualifies as a key reversal session. Oh, it doesn't. I'm sorry. It had to update. It did for a brief moment out there. Okay. So we're trading 1879.40. I forgot. I've got some kind of lag in my system. It could be a number of new charts and some tools that I added inside the e-signal platform. So I'll have to really test it out because I didn't experience that last night. That is for sure, as I was making these changes. But what we can see here in the S&P 500, just like the ES Mini out here, the high and the low of last month has been exceeded out here. It doesn't matter, how much of a close. If you see one tick below, in the case of the S&P 500, that means they would need to see a close below 1873.96 out there. Look, the larger the better. But that's the only potential reversal signal that is in place as we speak here right now inside of the S&P out here. Angie wants me to take a look at the NQ weekly and daily. Happy to do that. Let's switch over. We'll take a look at a weekly chart out here. In fact, I'll put up my. I'm going to switch over to this other tool. It's kind of a cool tool because it gives you one view. Here's the one view. So here's the Nasdaq composite. Here's the futures contract out here for the NQ. The top portion is the weekly chart of the screen. The bottom portion is the daily. That way we can take a look at them simultaneously. Now, the buy signal on a weekly time frame, the red color out here, let me get my cursor. The red color tells you you're definitely in sell mode out here. And on the weekly chart, there's no denying it. That the Nasdaq is really, the Nasdaq and the Russell, really the keys, one set of keys out there, major set of keys. And the weekly gave us a nice sell signal. However, from a weekly standpoint, if you were to see a close above the week ended April 11, 2014, the high of that week, which is 35.99.50, you're at 35.72 right now. A close above 35.99.50, now let's say this week out here, that would actually on the weekly chart totally improve it. It would give you a buy mode inside of using the Rhodes momentum indicator signals. What you also had here, why is it that we could possibly be taking a look at a significant bottom in the marketplace out here? Well, not number one, but for many reasons. As the Nasdaq came cascading lower, it completed an A to B equals CD to the downside. And it did that. And on the trading session of April the 15th, as price on the daily chart was approaching the 200-day exponential moving average, it created a hammer. Hammer candle is a one-day reversal signal. We got follow through the very next trading session. What is price doing right now? It's bumping its head up against the 200-day exponential moving average. That's the black squiggly line going across my screen. The high looks like the 200-day exponential moving average looks like is at 35.7788. The actual high that we've seen here so far today, 35.7750. I'd say that acts as a resistance level. If we see price get above that becomes bullish in the marketplace out here. So the Nasdaq, even at a daily chart here, yesterday actually gave us a confirmed buy signal inside of its chart pattern out here, and so that's what I'm looking at with regard to what's going on inside the weak link of the market. If we take a look at the let's take a look at the Russell 2000 itself. Let's look at the index. We can take a look at the IWM, so forth. Let's take a look at the Russell 2000. We'll look at a weekly chart. We'll look at a daily chart just to kind of keep things in perspective out here. The weekly chart, it too, in order for it to get to a nice confirmed buy mode, so here's a little bit weaker, I suppose, than the Nasdaq, than the NQ out here. In order for it to get to a buy mode on the weekly chart, you need to see a close above 1160.40. Now, it just so happens at 1156.20, that is the 200-day exponential moving average. So a close above that would be nice and bullish, and that's inside the Russell 2000 out there. Let's switch over. Let's go take a look at volumes. Remember, volume is only one portion, one element of any stock chart out here. It's not the only. The characteristics of a stock chart out here, they are at least four elements that I take a look at. As most of you know, one of those areas is going to be momentum, right? Momentum, another way to take a look at momentum is through a set of indicators. You know that the momentum or the speed, the indicator that I use is the relative strength index. Basel uses the stochastics. They are both excellent tools for identifying momentum. They correlate to each other by 85% or more out there. So I say it's best to become a master of one or the other. No reason to have them both necessarily on your stock chart. I mean, you can, but really they're both tools to measure momentum, and that's an important part of any stock chart out there. You've also got the, what I call the angle, the energy. David White's created an incredible tool called a power law vector indicator. It's just one element of it. Other tools that measure angle or verticality, the MACD. Does it, so that's another tool out there. Volume is just one aspect, supply and demand out there. Then you got volatility, liquidity tools out there to measure what's going on inside a marketplace, inside an individual stock as well. If we go take a look at the ETF, so one of those elements being volume, we know that the volume has been weak volume out here on the bounce. If we take a look at the IWM, let's just stay with that, see what it is doing here today. What do we know about it? It's up above the 0.382 retracement level of its entire move down from its highs off of March 4th. You get above that level, what's it say? 116.03 is on the table out here. It didn't have a key reversal session like the Qs did, like the NASDAQ did out here. Didn't make that bottoming reversal pattern. But what the IWM did, and that's a little dangerous, it tested a swing point low with volume out there. 76 million shares. We're testing the 60 million shares, but it couldn't bust it down. So if it can't bust it down, what's it going to try to do? It may try to bust it on the way up out here. Volume yesterday, nothing. 31 million shares. But what's it done here today? Already done 11 million shares, only been trading for an hour and 15 minutes. I don't know how volume is going to pan out today. It should find some resistance here, probably at the swing point high, April 9th high, right around 115.25 out there. If I were to try to take a look at a channel line inside, I don't even know how I could really draw a channel line on the to the downside here inside of the IWM. Let's see here. I can try. I can try to do anything. That might actually work. That would probably work as your channel line. You've got 3 points of contact here. So 3 points of contact as opposed to using my parallel tool. I'm just using the open from March 7th. That's in essence hitting the open of March 24th. That's hitting the open and close in essence of April 2nd, and it's hitting the open from April the 4th. So you got 4 nice points of contact in there inside the IWM. You can see, so as price gets up into that 116-ish area, that'll be the area where, if in fact price can get all the way up there, that'll be the area where the IWM would go ahead and give us a message as to whether it really wants to break out, or if that becomes a resistance area and then forms the next leg down. I can't tell you what it's going to do. I can only tell you what it's doing as we speak here right now, and that's important because you got to make your decisions based on what it is going to do, your trades, what they're going to do. You can be like Jimmy D in our den. He's long and he's tightening up stops. There is nothing wrong with that at all. If we take a look at the Qs out here, the Qs, that's what's on my chart right now. That's traveling above the 0.382 retracement. Again, that's from its move down from the highs of March 7th to its key reversal session that occurred here on April 15th. We're up above the 0.382 retracement. That was at 86.37. You're 87.41. That says 88.27. Let's try to do the same thing here with regard to the Qs. Try to identify a potential channel line out here, see if we can run into the same thing. Yeah, I'd have to say that becomes the channel line. Let's change the color on that one. Let's make this black. So we'll go take a look at that. We'll make that black out here. It looks like that is where price wants to move into. Interestingly enough, that happens to coincide with about the 0.618 retracement level, where I believe the Qs want to trade to, which is around $88.27. Someone in the den said, hey, this is maybe day 6 up in a row. Or if they're not saying it, I'm saying it. And so a pullback should take place. But what's interesting is on the way down, we only had 4 down sessions in a row before a retracement. And now we're in day 6 with an up move. Something to think about. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 76. S&P is up 8. Composite is up 32. Russell 2000 up 8 points. So a couple of questions in the den. One about the IBB out here. The IBB, the biotech sector inside the NASDAQ, clearly the weak sector out here. And the question is, if we take a look at a 60-minute chart for the IBB and draw a descending channel, all we've done is gone up to test the upper end of the channel. So first I've got the daily chart out here. So the daily chart, which is obviously going to be stronger than the 60-minute chart, or 120, or any other chart out here. Here is the actual price channel that exists, and this is by using co-located opens and closes, just using from the high here of February 25th out here. And so that's really the channel line that I would be paying attention to as a longer-term trend out here. What do we know about the IBB? If I've got this tool that I've built here, my peak and trough counter as far as the Chapman wave. If I start here from February 25th and we go ahead and we count down out here. Oh, I grabbed the wrong thing out here. Where is it? If I run that tool, we go ahead and we count down. Well, I totally grabbed the wrong thing. Let me do that here. I just need to click on it. You can see that in the Chapman wave peak or trough counter, it made that 7th wave down out there. I believe that stands for letter G out there. Now what we are seeing here on the move up, as far as moves here, Basil will be up next. Let me do this correctly here on the way up. So far, all that it's done on the way up, you're still really at the first level, right? You're still on its way up to the A level out here, to the first peak. In any event, I would be watching that trend line. If I switch over to the 60-minute chart, it's not as clear to me when I take a look at the 60-minute chart for where that channel would be. So I haven't been able to find where prices moved up and tested the descending price channel. Because if I start from the highs out here, back at 10:30 on February 25th, that red diagonal line going across my screen, the entire red. In fact, let me just switch this one so that it's all blue, because that would confuse. It would confuse you. It would confuse me out here. So we're going to take a look at two possible channel lines out here. If I take a look at that red line, that probably more coincides with what we're looking at on the daily chart, and I would say, no, it really hasn't hit that level. If I take a look at maybe another channel line that's out here, that's the blue line that's on my chart. We can see here on the 60-minute basis, it's at least broken that trend, if not a channel line out here, and says that the next area of resistance may, in fact, be that level. Even if we use a 60-minute chart out here and go ahead and count the peaks on the way up, let's go do that as long as we're here. Well, now what we can see here, it's in the fourth peak, but that is still underway here. Now, I also suggest that if you're using, if you're taking a look at a stock itself, don't use a 60-minute chart, because you don't get, if you're looking at volumes and so forth, you don't get equal sessions because you've got a 6.5-hour trading day out there. So what I'd suggest you use is something that breaks that into equal chunks, and that's why I think a 30-minute chart works better for you when you're taking a look and evaluating an individual stock. Just my thoughts out there for whatever, in fact, that is worth. I'll go back here to the ETFs. I'm going to take a look at the Qs. Why could this possibly be a significant bottom in the marketplace? Number one, the Qs here, and that's really the key. The Qs make significant lows with high volume. If you go back and you take a look at October 9th, high volume low. If you go back and you take a look at the low on June 24, 2013, high volume low. There are time periods where there are clusters of volumes. Look, big volume here on April 4th. That didn't turn out to be a low. We've had a couple of clusters here with some big volume, and oftentimes when you get those clusters in place out there, that itself creates that low. Well, on April 15th, you had some pretty good volume out there in the marketplace, and that, too, may be signaling a high volume low. That trend line inside the Qs, that black diagonal line, that's probably going to let us know whether or not this is just a counter-trend rally or whether we've seen a significant low in the market. Folks, stay tuned. Our man Basil Chapman is up next. Thanks so much for joining us. Go check out Mastering Probability. You'll enjoy it. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.